Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Brand new week after hitting that 21,000 mark. We will be watching out for whether we head higher from here or, we will see a bout of profit booking this week. Remember, Sensex still awaits its milestone level of 70,000. We'll be watching out for whether or not we manage to clock that level or not this week. Of course, if you look at global cues, fairly mixed. GIFT Nifty hinting at a mildly higher start and lots of stocks in focus, including the likes of GMR Airports, because GQG Partners has picked up a stake. We'll have to see whether or not it extends the cheer in today's session or not. And of course, if you have any queries, send them in to us on our YouTube feed and we will try and take them up with our technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street clocks a sixth straight week of gains with the S&P 500 notching a fresh high for 2023. November's non-farm payrolls report shows an unexpected drop in the unemployment rate. Meanwhile, the US economy adds 1,99,000 jobs, slightly ahead of estimate. All eyes will be on the Fed meeting and Powell's commentary later this week. Asian markets kickstart the day on a firm wicket, but Chinese stocks slide as investors digest November consumer prices data that fell at its fastest pace in nearly 3 years, showing persistent deflationary pressures. The GIFT Nifty is indicating a mildly higher start for the Indian market. India's stock market is set to surpass Hong Kong to become the world's 7th largest. The total market cap of all listed companies in India stands at $3.7 trillion at the end of October, slightly trailing Hong Kong's $3.9 trillion, according to data from the World Federation of Exchanges. And among stocks in news today, watch out for Cipla as its US arm recalls anti-epileptic drug on packaging issues. Tata Motors will be hiking prices from January, joining the likes of Maruti, and GMR Airports, as I mentioned, may extend cheer as GQG Partners buys stake in the company. Well, on that note, let me bring on board my first guest for today. Joining me is Aishvarya Dadheech, who's the founder and CIO at Fident Asset Management. Great to have you on the show, Aishvarya. I remember last time when we spoke, we had the results of the exit. In fact, we had, the exit poll predictions. And we were talking about where the markets will be headed once the state poll results were announced. And as discussed, of course, we saw Nifty clocking that 21,000 mark. Want to get in your thoughts as to, do you think we are going to head higher, or do you think some bit of consolidation is likely to kick in here?
Good morning, Nandita, and good morning to all the viewers. Yes, we discussed that last time when we met, and thankfully it played out the way we expected. And we saw a very strong rebound in the market. The biggest fear which we discussed last time also was about this policy continuity and the continuity of the government, which can possibly is the most important factor. And I think with this resounding victory in these 3 elections, market is clearly discounting that general election in May 2024 is more like a cakewalk, or possibly the probability has gone up much, much higher. And if you see, Nandita, this is the first time we have seen FIs turning around very, very strongly. Right? If I see the last week, Nifty possibly has gone up 3.8, 3.9%. But it is also the time when we are seeing that this large cap index has outperformed mid and small cap in the week. Right? And this, we have seen almost more than $3 billion of inflows by FIs in the last week itself. I think so far in the month of December, we are above $2 billion of inflows. But this tide turning around, possibly taking out one of the biggest risks of this election, is giving a lot of confidence to the market. And if you, obviously we saw Nifty touching 21,000 in the short term, but we have to really understand that this week will not be, in very short term, this week will not be like what we saw last week. There are a lot of big events which are piled up for this week. Obviously, we have the CPI data in the US. We have, Fed decision which is coming on 13th. And we also have BOE and ECB's decision coming out. We understand that inflation number, we saw what happened in China on the inflationary side. But, until these numbers are printed, we can see some volatility coming during this week. But if I see of the whole month, we expect this market to show more strength because, possibly no big negative news will be taken as a positive news. And turning around of FIs will definitely support the market in the coming weeks.
Right, Aishwarya, we're talking about levels of 70,000 on Sensex, right? I mean, just a few months ago, we were asking our experts by when do they expect Sensex to hit 1 lakh? So, the answers range from 3 to 5 years. But now, do you think that will be preponed and perhaps we could look at that level in the next 2 years itself?
That's a tricky one, Nandita. But what we expect that market should be compounding at anywhere between 12 to 14% for the next 3 years. Because as we discussed, the kind of work this government is doing and the kind of earning growth which we are expecting on the corporate profitability side. So we are close to 5% of corporate profit as a percent of GDP, and we expect it to inch to 7% in the next 3 years. And if that happens without any glitch, 70,000 could just be a formality. So 1 lakh could just be, a formality given the kind of compounding which we will see in this earning growth for the next 3 to 4 years. So everything boils down to earning growth, and which we believe have a very high probability to turn around of 12 to 14% in the coming years. So I would advise the viewers to not just look at, all of these eye-catching numbers of Sensex hitting 100 lakh, 1 lakh or something like that, or Nifty moving up more than 23, 24,000. What is more important is whether these corporates can roll out earning year after year, where we have the ability to create and separate those numbers. That is where the wealth creating opportunities lies in data. And I think there is a very, very high likelihood. As we discussed, this kind of GDP growth we saw, and obviously when RBI came out and revised our GDP guidance from 6.5% to 7%. And we all know RBI is pretty conservative in its thought process. So possibly 7.5% to 8% GDP for the next 2 years is very, very likely. And we discussed that, the kind of gross capital formation which has been created over the last 6, 7, 8 quarters, we believe it will continue to support our GDP growth. And on top of it, if we add 4 to 4.5%, 5% kind of an inflation, a 12% kind of a nominal GDP growth is very, very likely for the next 2 years. And if you convert those into revenues and earnings, a 12 to 14% compounding of stock market is quite doable for the next 2 to 3 years. So I believe strongly that the next 2 to 3 years is going to be a big wealth creating opportunities for the country. And investors has to do just one thing: they have to invest their money into high quality businesses where there is an extrapolation of earning growth is relatively easy, and the rest of the job will be taken care of the market, rather than focusing whether we will touch 1 lakh in Sensex in next 2 to 3 years. The Sensex possibly will not be I would say, investable thing other than investing in the countries can create this wealth creating opportunity for the investors.
Right. Speaking about sectors now, how would you approach the realty space now, given the fact that, there are reports that are suggesting that real estate's inventory has surged to over 1 lakh crore rupees, outpacing sales growth. But given the fact that realty, in the rate-sensitive basket has been an outperformer, realty index up 70% on a YTD basis, stocks have done fairly well. Do you think it's time to turn cautious when it comes to the entire real estate space?
So if we have seen the value in the real estate, which has been primarily supported in spite of higher interest rate, was the kind of consolidation we have seen in the sectors. The big players are becoming much bigger, and smallers were finding it difficult in a rising environment, rising interest rate environment. And obviously, because of the push on the infra side, the push on the realty have created a lot of good sales growth, especially in the discretionary part. I won't say the same for low ticket housing, but on the discretionary part of the businesses, we have seen very strong growth in the last 4 to 5 quarters. But at this juncture, when we see that, possibly that softening of interest rate is around the corner, and we will also see, if we look at our liquidity at the banking level, we are slightly under contraction mode over the last 2 months. And it's just a matter of time we will see easing of liquidity by the RBI in the coming months, and possibly a rate cut by, mid of the next year. I won't be surprised that even if you see a rate cut earlier than what even the US does that, possibly we might not do a very steep rate cut, possibly we'll to announce a lot of liquidity easing measures initially, and then possibly do a rate cut of 25 or 50 basis. It possibly will be shallow, but it will bode very well for the real estate. So there's a low ticket sizing, which we have not seen much kind of a growth over the last 2 to 3 years. Possibly we'll see a big, growth momentum coming up as the rate goes nosedive. So in that scenario, I believe that there's still a lot of to play in real estate. But one has to be very, very cautious into the names that they are buying. Obviously, as you said, we have seen a good rally. So risk reward is not that favorable, but I believe there is still a lot to go in real estate sector per se. Another thing is, if someone who is, want to really play this real estate sector but doesn't want to take that kind of a risk, they can always play proxy on real estate sectors. So instead of buying, businesses who are into constructions or real estate, they can buy proxies of whether they can get into tiles player or they can play into plywoods and, paint players, because these are all proxies on real estate where you can find a better quality management, where you can find better balance sheets, better visibility about growth. compared to the ups and downs we normally see in the real estate sector. So those are investors who want to play safe, can play through that. But anyone who's already invested in a real estate sector, I personally believe there is more to go into this.
Right. Very quickly, how would you approach the sugar space, given the fact that there has been curbs on ethanol production, right? And that is expected to weigh on earnings for some of the sugar stocks. So, would you advise investors to avoid this space completely at the current juncture, or do you think the dips should be utilized to buy into them?
So, at Fident, we normally don't invest into sectors where there's a huge amount of regulations by the government, because it's very, very difficult for us to extrapolate things in the future. And we have historically that we have seen is sugar are the stocks where those dictates of government always have a play on the sentiments of the sectors. So obviously we stay away from those. But any investors who are pretty interested into that, we always recommend that there's always a buying opportunity when such negative news hit the market, because that is where you try to average down and then bring your cost much, much lower. It's very, very difficult to tell on what the next level of visibility about those regulations and dictate, which will have an impact or the corollary impact on the growth profile and the cash flows of these companies. So as an astute investor, we stay away from these sectors which are regulatory guarded.
All right, with that we are running out of time. Thanks a lot, Aishvarya, for taking out time and joining in and sharing your thoughts with us. Always a pleasure.
Thank you, Nandita. Thank you so much.
Well, with that, let me also bring on board our technical expert for today. Joining me is Rajesh Palviya, who's the research head, technical and derivatives at Axis Securities. Great to have you on the show, Rajesh. 21,000 already clocked in, but we did see some bit of profit booking kicking in, and we ended below that level. But do you think consolidation would be the name of the game this week, or do you think we are poised to head higher? What are the charts saying?
Good morning, Nandita. So looking at the overall structure for the market, and the indicators are still showing that, we may see further more bullishness is likely to continue further as sector rotation is taking place. Mid-cap, small-cap space is, showing good traction in terms of buying. FIS flows are also on the positive side. So looking at the overall factors, we believe that, this momentum can extend further. On the downside, the Nifty is having important support area at around 20,900. Till these levels are intact, I don't see any kind of, dip or, any kind of, negativity at this moment. So buy on dips should be your strategy. Yes, we may see some bit of consolidation in terms of index, but overall structure, stock specific is on the bullish side, and I think on the higher side, Nifty is having major resistance area at 21,200. If we able to take out those levels, then this really can extend further towards 21,500 also. So overall structure is bullish. So I think one should trail their stop loss at higher side. That could be the possible strategy one can deploy at this moment. Overall stock specific momentum, we believe that is likely to continue. Even on the Bank Nifty also, the structure is on the bullish side. Most of the private sector bank as well as the PSU banks are showing good traction at this moment. And looking at the overall structure for Bank Nifty, we believe that Bank Nifty may also continue furthermore upside from the current level. So one should remain on the buying side on the Bank Nifty also. That is also showing good traction at this moment. So our view is bullish for both the indices at this moment.
Right, since you spoke about PSU banks as well, we have a couple of queries coming in on SBI on our feed. So what are the levels you'll be watching out for there, given the fact that SBI, if you look at the YTD performance, it is yet to participate in the rally, right? So do you think now is the time it would start participating?
So in the recent past, we have seen a good rally from the recent low, and looking at the weekly chart, the stock managed to give breakout of its falling trend line on the weekly chart. And looking at the weekly candle, yes, we do expect this momentum can extend further, as most of the PSU banks are going good traction, as the stock is now holding above 600 mark. So looking at the structure, our target for near term to short term is around 635 to 640. If stocks crosses above 640, then this really can extend further higher towards 670, 680 kind of zone also. So at this moment, those who are already bought the stock can trail their stop loss at around 600 and hold the long position for upside target of 635 to 640.
Right, those are the levels to watch out for on an SBI. But at the same time, we have a query on SBI Card from Aslam Sheikh and Siddharth Jain. They want to know your thoughts on this particular counter. And Aslam holds 1,000 shares and he bought them at 771. He wants to know your views for the next financial year on SBI Card. What are the kind of levels he should be keeping in mind?
So since last couple of a month, stock is in downtrend. On the weekly chart, in the previous week, stock managed to give breakout of its falling channel. So that's the first sign of reversal after this, corrective move. But still, near term to short term trend is still on the weaker side. On the higher side, yes, the major hurdle for the stock is at around 800 zone. If stock crosses above 800, yes, it can exhibit furthermore upside towards 850 to 880. If his view is to hold this stock for 6 month to 1 year time frame, yes, he can hold the position as stock has taken the support from its multiple support zone on the monthly chart, that is at around 720 level. So till the stock not breaks below 720 level, there is no as such worry in terms of trend. So medium term trend is still intact on the bullish side. So hold the position with stop loss of 720 on the higher side. Maybe in next 6 month to a 1 year time frame, it may reach to the level of 840 to 860.
All right, hope that answers your queries. But before I take up more queries, I want to get your thoughts on a Cipla. It's a stock of the day, given the fact that its US arm has recalled its anti-epileptic drug due to packaging issues. We already know that the Goa unit and Pithampur unit are on US FDA's radar. In fact, there are concerns that there may be an import alert on the Pithampur unit. These are the concerns, of course. No information about that, but of course concerns regarding that. But if you look at the stock, it has been fairly sideways. No update on the promoter stake sale as well. How should one approach the pharma pocket, especially Cipla, because there are so many concerns regarding this particular company right now?
So, Nandita, since last couple of trading session, some of the pharma stocks are showing some buying interest. Though overall structure is in consolidation, but we believe that after this consolidation, we may see a good run up in most of the pharma stock, as we have seen good buying interest, and most of the stocks are still holding their breakouts, which was registered in last month. So overall, if we analyze the Cipla is holding above its 50-day, 100-day moving average. Yes, there is a consolidation is taking place on the near-term chart, but on the higher side, 1250, 1260 is the key resistance area on the higher side. Once the stock crosses about 1260 zone, then it may resume its uptrend, as overall long-term structure is on the bullish side. So buy on dips is our strategy at this moment for Cipla. On the downside, the major support area, or you can say the trailing stop loss to hold the long position, is at around 1170. Till this 1170 is intact, one should remain on the buying side of the trade for near term to short term perspective also.
All right, that's the view on the pharma pack. But we have a query coming in from Nitin Limai. Wants to know your thoughts on an LIC. Of course, the kind of rally that we have seen in Adani group of stocks has, revived LIC's fortunes as well. The stock is up 11% or so in a matter of 5 sessions, right? Here on, would you expect the stock to hit the levels of 800, 850 pretty soon? Because 800 is something it clocked in Friday's session as well, hitting a fresh 52-week high.
So definitely this stock was underperformer, but in last couple of weeks, especially stock has moved from 600 level now to 770 kind of level. Very strong rally in last couple of weeks. Looking at the near-term, short-term structure, stock managed to view breakout of its previous swing high of January 2023. The long-term chart is suggesting that yes, there is a breakout. So I think one should hold the position. Yes, 800, 820 could be the immediate target for the stock. But I think looking at the weekly as well as on the monthly chart, we believe that now if the stocks holds above 745 level on a weekly closing basis, then there is a high possibility that in next couple of months the stock may exhibit good momentum on the buying side, and maybe we can see a level of 860 to 880 in the continuation of this uptrend. So I think one should hold their long position with stop loss of 740. Upside target is 800 to 820 for near-term basis. But if you can hold for positional basis for some couple of months, then possibly it may move further higher towards 880 kind of zone also.
Right, that's the view. But what about a Greaves cotton? Kathiravan K wants to know whether it's the right time to buy into a Greaves cotton or not. And he wants to hold it for the next 5 years. Would you advise him to look at this particular stock?
See, since last almost 7-8 years, stock is moving in only in very tight range. On the higher side, 160, 170 is the supply zone. On the downside, around 90 to 100 rupees is the important support area on the downside. Stock is not going anywhere since last 4-5 years. So major rally or major momentum on the high side will takes place only the stocks once the crosses above 170-75 zone on a monthly closing basis. That is still not there on the chart. So we believe some more consolidation we can see in the stock prices for near term to short term. Also on the long term, 170 is the major resistance zone. So if you want to hold it for 5 year time frame, then I think you should buy and accumulate the stock in the decline also, as the major support area on the downside is at around 100 rupees. So you have to bring down your cost, but you can add aggressively once the stock crosses above 175. Then we can see a level of 250 to 300 kind of rally also. But at this moment, we believe that some more consolidation we can see in the Greaves cotton for some more time.
All right, expect some more consolidation on Greaves cotton, and try to buy it at the levels that Rajesh just mentioned. But before we take up more queries, what are your thoughts on a GMR Airports? Saw a very good 12 to 13% rally in Friday's session. Of course, GQG Partners has picked up a stake. Here on, what are the charts suggesting? Would you say it's in overbought zone, or do you think headed high from here?
See, very strong buying action in last week. Looking at the breakout on the weekly chart, we expect this rally can extend further higher as the very strong breakout with the volume action. So looking at the overall structure, our view is still on the bullish side. The stock is forming rounding bottom formation on the monthly chart, and we believe that if stocks continues to hold above 62 level, then the positional target for this stock is towards 80-85 also. So those who have bought for trading perspective or for positional perspective, they can hold their position with stop loss of 62. Upside target is 80-82.
Right. Just saw a query on our feed on whether or not it's the right time to book profits into a Titan as well as Indian hotels. I think both the stocks have done fairly well on a YTD basis. Would you advise investors to at least book partial profits?
See, Titan is clearly a wealth creator stock. Stock is continuously in uptrend. If we analyze the long term, short term, as well as the medium term structure, stock is clearly in the bullish territory. So one should can book some partial profit, but I think if you don't want money at this moment on your table, I think you can remain invested in in Titan, and I think we can see furthermore upside from the current level also. Minor dip, yes, we can see due to volatility, but still overall structure for Titan is on the bullish side. It's a wealth creator stock. I think one should hold this stock in their long-term, short-term portfolio also. Yes, some profit booking he can do in Indian Hotel, as a stock has already run up in last 4-5 weeks. And looking at the structure, yes, some profit taking is happening at higher level. So Indian Hotel one can book as stock is showing some profit taking from its recent high. On the downside, again, if you get opportunity to buy in decline towards 400 level, again you can buy the stocks whatever you are selling at this moment on the partial profit.
All right, hope that answers your query. Just a couple of more queries, would like to squeeze them in. Ashish Goel wants to understand whether Hindalco can reach 800 levels in the next 2 years. Stock is close to 52-week highs. Last 6 months, we've seen gains in excess of 20%. Near term, do you think higher highs are possible? And over the next 2 years, 800, do you think it's a possibility, or do you think it's a distant possibility?
So near-term structure is looking bullish. Some of the metal stocks are showing good traction. So near-term, yes, we can see a good rally towards 550, 570 kind of zone. One can hold their a long position for trading perspective with stop loss of 515. For 2-year time frame, again, it's very difficult to say because again, the metal space is linked with the global cues, and it's very difficult to predict the 2-year global cues, what kind of sentiment we are going to have from China and from other global market. So for 2-year time frame, though stock is recovering, and on the monthly chart also, yes, there is a uptick is coming, and looking at the near term, short term, and long term structure, 600 and 620 is the major supply zone at this moment. Once stock crosses about 620 level, yes, maybe this rally can extend. But at this moment, I am not in position to give target for 2-year time frame. Yes, but 620 could be the next target on the stock if the stocks continues to hold above 480 level on a monthly closing basis.
The last query for today, Satya CK wants to know your thoughts on a Paytm, and we also had a couple of queries on Zomato on our feed. So these two stocks, given the fact that we've seen a sharp sell-off coming in on Paytm after it has reduced, its sub 50,000 rupee loan after RBI's crackdown on consumer loans. Of course, this has come as a setback, and brokerages are saying that path to profitability gets delayed. And Zomato, SoftBank has exited its stake, so that stock was also in focus. These two stocks, how should one trade into them now?
So very sharp cut in PTM in last week, almost 25% down in previous week. And looking at the near-term, short-term structure has turned on the bearish side. Stock is now slipped below to 200-day moving average. There is a bearish gap formation is already taken place. So until now, stock not crosses above 800, there would be sell on rise kind of strategy one can adopt in this stock. On the downside, the next major support which one can see on the weekly chart, that is at around 600 and 580 zone. So I think for the more pressure we can see in the Paytm on the near term basis until the stock not crosses above 700 level. I think we can see further more pressure on the downside towards 600 zone. Zomato is looking still on the bullish side as stock is still holding its breakout level on the daily as well as on the weekly chart. Stock is consolidating since last couple of weeks in a broader range. On the downside, the major support area for Zomato is at around 105. Till the stock not breaks below 105, trend is likely to remain on the bullish side. On the higher side, once the stock crosses above 126, 128 zone, then we can see a level of 140, 145 also on the higher side.
Right. I think this wraps up our query segment for today. But before I let you go, Rajesh, what should investors keep on their radar for the next few sessions? Any stock recommendations?
I think Motherson is one stock where we are focusing at this moment. Stock was in downtrend, and on the weekly chart, we have already seen there is a breakout of falling trend line. Looking at the breakout, we believe that Motherson can continue furthermore upside towards 100 to 105 kind of level in positional basis. So one can buy Motherson with stop loss of 92. Another stock that we like at this moment is from metal space, that is JSW Steel. This stock is clearly showing strength and almost enjoying its all-time high trajectory. Looking at the near-term, short-term structure, we believe that if stocks holds above 820 level, then possible target for JSW Steel we can see towards 870 to 880 on the higher side. And the third stock that we like at this moment is RBL Bank. Very strong buying action in last couple of weeks. Stock managed to give breakout of its multiple supply zone. And looking at the overall structure, we believe that if its RBL can continue above 260 level, then possible target on the higher side we can see towards 285 to 290 also.
All right, Samvardhana, Motherson, RBL Bank and JSW Steel, 3 recommendations coming in from Rajesh. With that, Rajesh, thanks a lot as usual for taking out time and joining in and addressing all our viewer queries as well. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But stay tuned because coming up next is Open Bell.